Good day, subscribers, and welcome to Momentum channel. My name is Mo, and in this video, we are going to talk all about passive stock market investing, how I managed to take several steps in order to create a portfolio of a stock market through ETF investing and get it to the level that it is today, from a mere $500 now, fast forward to almost 50 times larger in terms of its size. And what have been some of the ups and downs of this stock portfolio investing, and why things have happened the way they are. What are some of the lessons that we've learned along the way? In this video, we're going to share that all with you transparently. As you notice here on the screen, this is an overall view of our investment portfolio that we have with Wealthsimple Invest. For those of you who might not be familiar, Wealthsimple Invest is a robo-advisor here in Canada. They also offer their services in the UK and in the US. What they offer is, as the name suggests, is a robo-advisor. You can decide your risk tolerance, deposit your funds into this account, and then automatically the system would invest your money into a basket of high quality exchange traded funds, whether it is equities such as a basket of ETFs of stocks, or it is fixed income. For instance, it could be bonds. Again, really depends on your risk tolerance. For me personally, given my age and aspirations and kind of the investment goals, I've set aggressive target. As a result of that, about 90% of my deposits are actually invested into equities, aka stocks, and about 10% are invested into bonds. So as you notice here, this account was opened about 4 years ago, in fact, May of 2017, and we initially deposited about $500 into the account, actually about exactly, I think, $500. And from there on, this account went through ups and downs. So you see here, at one point, we reached the maximum amount of account value of about $60,000, and then we had a huge dip here. So from $60,000 all the way down to $10,000. And this is, there's a reason behind it. In fact, at the time, I withdraw an extensive amount of money from my account because I needed that to use it as a down payment for a house. And that was an alternative decision for us in terms of alternative investment plans. But from there on, I'm glad that we managed to get back on track, grew this account again from a low of $10,000. Fast forward, this was around September of last year, to in less than a year now, sitting closer to 25,000 in total value of this portfolio account. Well, let us take a close look at that journey, what happened, how much dividend income, in fact, we earned through this portfolio year after year. I think that would be quite interesting for a lot of investors out there who are considering whether they should go with a passive investing approach or an active investing approach. Dividend income is one consideration, as well as the account balance appreciation. So we're going to take a close look at it. And the best part is, for me, I've experienced both passive and active investing. In fact, I do have still an active investment portfolio as well as a passive investment portfolio, but I will be sharing with you what are some of my preferences as we walk through this further. Right, as you notice here, here's the annual performance report that we have for the year 2017. In that year, I only had a registered retirement savings plan account with Wealthsimple Invest. And what ended up happening is that at the end of the year, once that account was open in May, we ended up earning about $11 to $10.60 in dividend income. And the year ended with an overall change in the balance in our account. We did not withdraw anything from our account. And in fact, we deposited in that first year close to $2,200. Not the highest amount of deposits, but it was just the first year. We're trying to gauge really this portfolio. And I remember very clearly in the first few weeks, the account balance really dipped quite a bit. And I was really disappointed with Wealthsimple Trade. At the time, I was very new to investing. And I sent an email to Wealthsimple kind of contact center and asked them, hey, you know what? I'm quite disappointed. This is supposed to be an investment account. Why is my account balance going down? I want to close my account. What I was very pleased with is the fact that Wealthsimple actually responded very thoughtfully, and they kind of reminded me of the fact that if my investment goals and investment targets has not changed, I shouldn't necessarily change my course, because if I was planning to save for my retirement or save for, let's say, a down payment 10 years down the road or whatever that end goal might be, depending on my time horizon, if my time horizon hadn't changed, I shouldn't panic, because just purely because the stock market is doing poorly shouldn't really cause any panic to me, because at the end of the day, this is investing longer term through quality exchange traded funds. So you are bound to some of those ups and downs of the market, but you shouldn't be panicking if your end goals does not change. It's just part of the kind of the game, and you have to actually maximize those opportunities. And I didn't get it quite at the time, but I'm glad that at least I decided not to close my account and maintain the account and gradually add more. And as I did more reading and I understood how stock market works, then I really started to appreciate actually those pullbacks in the market, because they present massive opportunities for you to invest more. And I did take full advantage of that during the March 2020 pullbacks, when we had that in the stock market, and as well as any other occasions where there was pullbacks in the market. Moving forward, in 2018, as you see here, that's when I started opening my tax-free savings account, the TFSA account. In that year, we deposited a lot more funds. We deposited $14,697 exact into our account. We did not withdraw any money. You notice here that year, we earned closer to $227 or $228 in dividend income. Not bad, quite a decent jumps from $10 to $228. And our end year balance of our account was around $16,100 in that account, in our portfolio. Then in 2019, we continued depositing more amounts to our balance. In fact, in that year, we grew our deposit to 18,000 extra deposits. And that led us to have a closing account balance of $37,929, closer to $38,000 at the end of 2019. That year, look at that, our dividend income almost skyrocketed. We earned closer to $700 in dividend income. That's just an impressive amount of dividend income in that 1 year. So we were very pleased with this passive portfolio. And of course, we had market appreciation. You can see here the change in our market value, the gains in terms of appreciation of our portfolio was also very decent. Now, fast forward again to 2020, and that's the year that we continued to deposit, but as I indicated, we also withdrew some money for our house purchase. We deposited a decent amount of $22,000 into our account. So that was by far the largest amount of deposits in a year that we've had since the opening of the account, since the past several years. But we also withdrew $49,000, $49 and change from this account, as I mentioned, for a down payment. That actually ended up bringing down our total account balance to about $14,000. All right, in terms of the dividend income in 2021, you'd see here we had closer to $800 dividend income in that year, despite the fact that, of course, we withdrew some funds towards the end of the year, but still it was quite a decent dividend income. In fact, the highest dividend income, annual dividend income that we've had from Wealthsimple Invest so far. That is quite impressive. What I was going to show you is the deposits. So when you click on it here on the portfolio, you see how much deposit you've had. You see over the past 6 months, I'm averaging around $1,500 deposits into my account. I think the key lesson and key takeaway that I want to share with you is the importance of being diligent and the importance of being financially disciplined. That is so important for me. Every paycheck that I get, it's been a habit of mine that I automatically deposit funds to my accounts here with Wealthsimple Trade. It is a kind of habit for me. I've built it into my financial discipline of dedicating a certain amount of funds that I want to move on to my investment accounts. And that's a decision that I've made. That's not necessarily easy. There are months that my costs might go higher for certain reasons, but I've kind of committed myself to that. The other part is the importance of budgeting. We've been trying to be very diligent about that. make sure that we jot down all our costs every month, whether it's cost for grocery shopping, whether it's costs related to, for your telephone bills, for internet bills, whether it's for going out to eating out, restaurants, entertainments, any costs related to your housing, mortgage, electricity, all the costs jotted down, and then really applying that critical lens to it. Every month we go through that, we identify what our costs are, and from there on trying to really see if there are opportunities for us to cut some of those costs. And you would be surprised, because either there are obvious occasions where you can actually deduct the cost, or perhaps try to manage it more affordably, or there might be cases where maybe it's not an immediate cost saving, but there's opportunity for you perhaps 1 or 2 or 3 months down the road to adjust that cost, whether through renegotiation of your contracts, maybe switching the contracts that you have, whether for your phone or internet provider, or sometimes, cut that cost altogether. Maybe you don't need that subscription to Spotify music, or perhaps a paid subscription for a certain service provider. It may not sometimes be as much, but when you do the math and you look at the grand scheme of things, some of those small costs actually snowball quite extensively, and really can save you a ton over time frame. The other part that really was an aha moment for me is, as your dividend income comes in, you start seeing that actually through this list of transactions, the dividend income might not be that much. Sometimes maybe in a week you earn $2 in dividend income, and sometimes some of the dividend income coming in might be 10 cents or 20 cents. It may be so minuscule and negligible that you might think, oh, it's not that much, so what is it even worth? But as they added up and you sum them up at the end of the year, when you look at it, holy wow, you have $700, $800 dividend income. That's when it starts to hit you, and that's when you start to appreciate even those tiny dividend income that you'd received throughout the year. And that's really starts giving a whole new perspectives to the value of money. And you want your money to be working for you, and every time that you're spending your money, you want to really make sure that it's actually being spent wisely, because if you were to utilize that and save it for your future, it could mean the difference of retiring perhaps 5 years earlier or 10 years earlier. So you want to be very mindful of that. And for me, definitely my plan is not to work until I'm 60 or 65. That's definitely out of the kind of equation for me. I definitely intend to get to early retirement, really following that FIRE mentality of financial independence, retire early. Whatever that early year can be very subjective. It really depends on your preference and what it means even for you. You could consider to be fully retired, or you could consider to be perhaps semi-retired. Maybe limit the amount of hours that you work on certain jobs, maybe pursue some other passion that you enjoy and it still pays you. Whatever that might be, it is for you to decide. But for me, that's something that I'm definitely looking to. Personally, between active investing and passive investing approaches, I enjoy both. There is some thrill that I get from active investing because I get to do research and pick certain companies or stocks, and really sometimes you get really nice returns. The returns there can be really high and lucrative, whereas for passive investing, the returns are not necessarily quite wow, especially in the shorter term, but longer term, it is a very solid way of investing, and I think it's a very hassle-free way of investing. That's why for me, I'm kind of torn in between. I think as I start to become more seasoned and perhaps age more, I think I would be probably leaning more towards passive investing, which is why I'm pursuing both at the same time. But I'm definitely continuing my passive investing as one solid way of a dividend portfolio that I'm trying to build here. It is something that I really enjoy, which is why I'm almost on a daily basis, I'm depositing some funds. It's not huge. Maybe on a daily basis, I'm depositing $20 or $25, but it is a good feeling, knowing that you're investing for your future and you're building a brighter future for yourself. That's really how I'm perceiving this. I apologize, this video went a little bit over time and got quite longer, but I really wanted to share some of my perspectives on how I see investing and why I'm investing for my future, for the future of my family. I think there are multiple brokerage accounts out there. For me, I've been using Wealthsimple Trade for the longest and absolutely love it, as I mentioned. So definitely consider opening up an account if you haven't, and if that's something that interests you. With Wealthsimple, they have an offer that if you use the referral link, that is listed here, and I will add it to the description of the video, you actually managed to get your first year of deposits up to $10,000 managed for free. The fee that Wealthsimple charges after that is only 0.5%, which is very minimal. And for that, you get to have your accounts balanced automatically, rebalanced as you deposit, even if it's $2 or even $1. They utilize that and buy a fraction of a quality ETF for you in a diversified manner. So I just love that. There's no way you could do that easily for yourself. This is one of the features that they offer, which I think is just brilliant. And on top of that, as you add more and invite more friends, you can actually build up a more cushion of managing your account for free. So for me, for example, up to $41,000 is now managed for free because I've invited more and more friends. You can see I've invited 7 friends that have actually opened up accounts here. I would love to grow this cushion more. So if you don't have an account, I would be really appreciative of you if you actually use my referral link. It's actually win-win for both of us, and really it means a lot to me. That's one way you can support me and my channel here on YouTube. I hope you gained something of value from this video. If you did, please be sure to give this video a thumbs up, and of course don't hesitate to ask me any question. I've been investing with the stock market through Wealthsimple and other brokers for years now, and would love to share with you any of my experiences and what I learned, and some of perhaps my failures along the way that I hope you do not repeat. Be sure to leave me a comment and ask me any question that you might have. Of course, don't forget to subscribe to Momentum channel. Here on Momentum, we post every week several videos about investing and financial freedom. Thank you very much for watching this video, and I hope to see you next time.